I'm here now with Andrea Balzarini from Telecom Italia. Andrea, welcome to the online channel.
Thank you.
How has the eurozone crisis and other events in the capital markets over the last 2 or 3 years affected the way that Telecom Italia look at the bond market?
Well, we've always relied on the bond market for most of our funding. When I say most, it means like 80% of the total. So obviously, whatever has been affecting the market has been affecting us at the same time. Obviously, the volatility which started to kick into the market is something we were not used to, as well as we were not used to having such short windows which provide for a decent execution risk. Both these things obviously called us on a different management of our funding strategy, because these days, and I would say since the financial crisis kicked in with a Lehman default, you need to be extremely quick to get into market. So we needed to change our process for getting ready, because right now you need all authorizations in place, all docs always ready and available, and I would say also keeping a few banks hot on the topic so that you can mandate the previous night and execute the following morning. On the costs, I would say for sure we've been suffering in terms of spreads, but the overall funding cost hasn't changed much, because I would say over the last 10 years we've been seeing very different cycles in the credit market, both extremely bullish ones and the one we are living these days. The point is, all these moments in the life of a market have been coupled with very different levels in interest rates. So very bullish credit markets have been paired with quite high interest rates. These days interest rates are almost nil in terms of level. So the overall funding cost for us at least always stayed in some sort of a range between 5 and 7%, which means that the P&L was not and is not going to be affected, which is obviously very important.
To go back to the first part of your answer about the speed at which you have to move now, what determines whether you decide on a Tuesday night to access the market on a Wednesday? Is that something you talk to the banks, or do you have your own metrics? How does that work?
Well, I would say it's a mix. Obviously, we constantly monitor the market in terms of levels, in terms of trading flows, in terms of any insight and information which can give us a sense of what's going on. Obviously, you rely on the advice of banks, which know us very well in terms of our needs, in terms of our attitude towards the market, so that is an important part. I would say in the past few months, headline risk became extremely important. I would say headline risk on the one side and headline opportunities on the other. As an example, the last trade we put into the market came on the following day after basically the announcement of a bailout on the Spanish banks. So we got the sense that, at least for a few hours, that headline could turn into a risk-on attitude by market players. So it never was like this, I would say. These days you have to monitor these things extremely carefully and from time to time also take advantage of them.
So it's almost on an hourly basis. You mean you have the market window opens and closes within a day?
Yeah, maybe it's not even any more appropriate to talk of windows because
post boxes.
Yeah, it is getting much more difficult rather than finding a window open.
Which leads me to my next question, which is looking. We don't think that this situation in the eurozone is likely to change too much over the next 12 months. Yes, of course, there's a downside risk and all of that, but no one really posits it suddenly improving or going back to what it was. Looking at when you plan your funding strategy for 2013 and in future years, how do you manage that you know, that level of risk that the markets might not be open?
Well, we've always been very prudent in terms of our attitude towards any kind of difficulty in the market. I mean, the euro market from time to time simply shuts down. We are aware of that, so you keep ready for that. What does that mean? Always, we are always pre-funded for the following 24 months of debt maturities. So when we do a deal, basically we are not refinancing something which is next to maturity, but we are refinancing something which is going to be due in a year and a half, a couple of years' time. Obviously, we keep a significant buffer of committed bank clients undrawn, which obviously provide for an additional cushion in case of extremely severe conditions.
And the global borrowers, you've been coming for a number of years, you're here again this year. What's your opinion of our conference?
Well, I would say it's maybe the only conference I attend each and every year very constantly, because I find it some sort of a unique opportunity for the financial community, the DCM financial community, to get together, issuers, investors, banks as well. And I always found the conference able to provide each and every single year a very useful insight into the, how can I say, the topics which are dominant at the moment. It was so, I remember the conference which preceded the Lehman default, where the topic was attention to the toxic assets, and we all know how it went following that conference. Maybe we cannot blame the conference, but for sure there was some useful insight, and it keeps on being in place.
Well, thank you very much. It's been a pleasure having you here.
Thank you.